Welcome to Askprep, your trusted companion for UPSC and IAS preparation. Today, we are delving into an inspiring and transformative topic in Indian economics, which is the Grameen Bank Project. Known as one of the most impactful microfinance initiatives globally, this project has played a pivotal role in empowering rural communities, alleviating poverty, and promoting financial inclusion. For UPSC aspirants, understanding the Grameen Bank Project is essential as it intersects with topics like economic development, social empowerment, financial systems, and poverty alleviation strategies. Through this session, we'll explore its origins, objectives, and transformative impact in detail. So, without further delay, let's get started. Introduction. The Grameen Bank Project is a revolutionary initiative in the world of microfinance, designed to empower the poor by providing them access to credit without the need for collateral. Established in Bangladesh in 1976 by Professor Muhammad Yunus, the project sought to address the financial exclusion of marginalized populations, particularly women, who were often neglected by traditional banking systems. The Grameen Bank's approach focused on offering small loans, or microcredit, to enable individuals to start or expand income-generating activities. It introduced an innovative group lending model that emphasized collective responsibility, trust, and community support, thereby minimizing the risk of loan defaults. This project has not only transformed the lives of millions in Bangladesh but has also influenced global microfinance practices, becoming a model for poverty alleviation and financial inclusion worldwide. Through its focus on women empowerment, entrepreneurship, and grassroots development, the Grameen Bank Project has redefined the role of credit in fostering economic and social progress. Background and origin, founder and inception. The Grameen Bank was founded in 1976 by Professor Muhammad Yunus, an economist and visionary from Bangladesh who was deeply concerned about poverty in rural areas. While teaching economics at Chittagong University, Yunus decided to shift from theoretical models to real-world solutions, aiming to address the hardships faced by impoverished communities. The idea for the Grameen Bank originated in the small village of Jobra, near the university. Yunus observed how poor villagers were trapped in the cycle of poverty because they were forced to rely on exploitative moneylenders for small loans. These loans often carried exorbitant interest rates, leaving borrowers in perpetual debt. To break this vicious cycle, Yunus started by providing small loans from his personal savings, enabling villagers to invest in basic income-generating activities, such as weaving baskets or raising livestock. His experiment proved highly successful, with borrowers repaying their loans promptly. This success encouraged him to expand the project beyond Jobra, laying the groundwork for what would eventually become the Grameen Bank. Motivation. The motivation for the Grameen Bank Project stemmed from the glaring inaccessibility of traditional banking systems to the poor. Banks generally required collateral, had complex application procedures, and imposed high transaction costs, factors that excluded the rural poor, especially women, from accessing financial services. Professor Yunus believed that poverty was not due to a lack of skills or motivation but rather the lack of access to financial resources. He theorized that small, collateral-free loans could enable the poor to become self-reliant by starting or expanding microbusinesses. This vision was especially focused on women, as they were often the primary caretakers of families and could use the loans to improve household welfare. Yunus aimed to empower women economically and socially, breaking the barriers of traditional gender roles. Formal establishment. The success of the initial experiments in Jobra and nearby areas led to the formalization of the Grameen Bank. In 1983, the bank was officially established under a special government ordinance in Bangladesh. The Grameen Bank was designed as a specialized financial institution, focused on microfinance and guided by the principles of poverty alleviation and social development. Its unique structure emphasized the following: collateral-free lending, trust-based lending without requiring assets as security. Group-based model. Borrowers were organized into small groups, and group members supported and encouraged each other in loan repayments, ensuring collective accountability. Focus on women. Nearly 97% of its borrowers were women, reflecting its commitment to gender empowerment. Sustainability. the bank aimed to be self-sufficient by charging reasonable interest rates and maintaining high repayment rates. Since its formal establishment, the Grameen Bank has become a beacon of hope for millions of people, growing into a global model for microfinance and inspiring similar projects in countries worldwide. It has not only provided financial access to the underprivileged but also created a platform for entrepreneurship, empowerment, and economic transformation. Objectives of the Grameen Bank Project. The Grameen Bank Project, initiated by Professor Muhammad Yunus, was designed to address the pressing issue of poverty and financial exclusion in rural Bangladesh. The bank's objectives reflect its commitment to promoting social and economic development among marginalized communities. 1. Poverty alleviation. One of the primary goals of the Grameen Bank is to reduce poverty by providing financial resources to the poorest segments of society. Access to capital. The bank provides small, collateral-free loans to individuals who would otherwise have no access to traditional banking services. These loans enable borrowers to invest in productive activities such as farming, handicrafts, or small-scale trade, helping them generate income and escape poverty. Sustainable livelihoods. The focus is not just on providing one-time financial assistance but on creating long-term self-reliance by enabling borrowers to develop sustainable livelihoods. The loans often lead to recurring income streams, improving the overall quality of life for borrowers and their families. Breaking the debt trap. By offering affordable credit with reasonable interest rates, the Grameen Bank helps borrowers avoid reliance on exploitative moneylenders who charge exorbitant interest rates. 2. Empowering women. The Grameen Bank places a strong emphasis on gender equality and women's empowerment. Approximately 97% of its borrowers are women, as they are often the most disadvantaged members of rural households. Economic independence. Access to microcredit enables women to start their own businesses, generating income and becoming financially self-reliant. Enhanced decision-making power. When women earn their own income, they gain greater influence in household decisions related to education, healthcare, and financial planning. Social empowerment. The process of borrowing, managing loans, and repaying them instills confidence and leadership skills in women. This also helps challenge traditional gender norms and promote gender equity in rural communities. Community impact. Empowering women has a ripple effect, as they tend to reinvest their earnings in their families, improving the overall well-being of the household and community. 3. Financial inclusion. The Grameen Bank aims to bring the unbanked population into the formal financial system, addressing the gap left by conventional banking institutions. Accessibility. The bank eliminates barriers such as collateral requirements, complex paperwork, and high transaction costs, making financial services accessible to the rural poor. Trust-based model. Instead of relying on collateral, the bank employs a trust-based group lending system, where borrowers form small groups to ensure mutual accountability for loan repayments. Savings programs. In addition to loans, the bank encourages savings habits among its members. This helps create a safety net for emergencies and instills financial discipline. Wider economic participation. Financial inclusion enables the poor to participate in broader economic activities, contributing to national development and economic growth. 4. Encouraging entrepreneurship. The Grameen Bank fosters entrepreneurship by supporting small-scale, income-generating activities, particularly in rural areas. Business development. Borrowers use microloans to start or expand small businesses such as agriculture, dairy farming, tailoring, or retail shops. These ventures provide a stable income and employment opportunities. Risk mitigation. The bank's collateral-free loans reduce the financial risks associated with starting a business, encouraging individuals to take entrepreneurial initiatives. Skill development. Through their association with the bank, borrowers often acquire business management skills, financial literacy, and problem-solving abilities, which are crucial for entrepreneurial success. Community impact. Supporting small businesses fosters local economic growth by creating jobs and increasing the availability of goods and services in rural markets. Key features of the Grameen Bank model: microcredit system, small, collateral-free loans with affordable installment repayments. Group lending model, small groups ensure accountability and reduce defaults. Focus on women, 97% of borrowers are women, enhancing family welfare and community development. Low interest rates, affordable loans compared to traditional moneylenders. Grassroots approach, bank officers visit villages, removing barriers to access. Comprehensive services, offers savings programs, insurance, and financial literacy training. Impact and achievements, global recognition, inspired worldwide microfinance initiatives, won the Nobel Peace Prize in 2006. Financial inclusion, expanded access to credit for marginalized populations. Social development, improved health, education, and housing in communities. Challenges and criticisms, loan dependency, risk of borrowers falling into debt cycles. Sustainability issues, heavy reliance on external funding and scalability challenges. Operational challenges, difficulty maintaining low costs and reaching remote areas. Repayment pressure, group dynamics can create undue stress on borrowers. Limited scope, focuses on micro-level issues, not structural poverty. Influence on India and other countries, India, inspired SHG Bank linkage program and MFIs like Bandhan Bank. Global adaptation, replicated in Asia, Africa, and Latin America. Policy influence, highlighted microfinance as a key tool for poverty reduction. Conclusion. The Grameen Bank Project stands as a beacon of hope for marginalized populations worldwide. By redefining the concept of credit and removing barriers to financial access, it has empowered millions to improve their economic and social conditions. While challenges remain, the Grameen model continues to inspire microfinance innovations, proving that small loans can have a transformative impact on poverty alleviation and social development. At Askprep, we aim to bring such insights to help you prepare better for your UPSC and IAS examinations. Thank you. This is Askprep, your guide to mastering UPSC and IAS preparation. Let's decode complex topics and simplify your journey to success.